everyone. Welcome to Money Talks. I'm your host, Bill Barhydt, founder and CEO of Abra. We took a little bit of a break last week, had a lot of travel going on. Bitcoin Miami, still reeling from all of that. And I actually was down in Los Angeles yesterday presenting at Peter Diamandis' event, which was astounding. Just some phenomenal people. And we had a 2.5 hour conversation about crypto and where that's all going. But now we're back. And we're going to have a really interesting conversation today. We'll get to our AMA as we always do. So start teeing up your questions. We'll get to those. We're going to have Natalie Brunell, our Bitcoin analyst, on in a little bit to give us her update on what's happening with all things Bitcoin and, of course, the price action. We've seen some sanctions against a Bitcoin mining firm for the first time, and record-breaking prices for homes here in the US. And would love to get Natalie's take on what all of that means. We've got some fantastic news for our Abra Earn users. We've got Luna, Dot, Matic on tap for Abra Earn. So I'm super excited about that. We'll get into your questions there as well. And look, so it's a strange time for crypto, right? We'll get into this. I want to talk about kind of the volatility and why Bitcoin volatility seems to be at about an 18-month low. But at the same time, it seems to be increasing its correlation to the stock markets, and stocks are in a bit of a free fall today. And we'll get into that as well. So where do we start here? So if you're watching this show, you obviously hold some crypto or probably hold some crypto. And, relative to where we were in the middle of COVID, right, 2020 going into 21, when everything was up and to the right, the volatility has really decreased for Bitcoin. And as I said, stocks are either flat or off against their highs. The QQQ which is the NASDAQ 100, which generally tracks the growth technology stocks, is off about 20% versus its highs. Coinbase stock, if I'm reading this right, just hit an all-time low, by the way. So what's really going on here? Let's get into this. So the first thing that I've been looking at is what has changed significantly versus last week, and the bottom line is that not a lot has changed, okay, but we are seeing continued risk-off selling in equities, right? So the equity markets, for me, the number one thing to watch are bond yields, which are driven obviously by interest rates. As yields rise, stock valuations get compressed, and why? So stock valuations are traditionally, right, supposed to be driven by discounted cash flows and enterprise value of the underlying companies that they represent. Now, when you do a discounted cash flow calculation, if you learned this in school, you need an interest rate to apply to that discounted cash flow. And if you use the risk-free rate associated with treasuries, and that rate is going up, which it is now, it causes the valuation of these stocks to compress, which results in a sell-off. That's why you always hear stock prices go up when bond prices are going down, and traditionally stock prices go down when bond prices are going up. So if I was to show you the Treasury yield curve, it's the 10-year curve is nearly 3%, which is at multi-year highs. So look, the fixed income market is basically assuming price inflation at 40-year highs continuing for the near term. And we have a Fed funds rate, which I talked about 2 weeks ago, which is flattening, which basically looks like the markets are pricing in recession. Now, what's interesting is at the same time, the housing market is also pricing in this current environment. Mortgage rates are spiking, right? They're above 5%, 5.25% in the United States for the first time since 2010. Obviously, this makes buying a new home much more expensive and discourages borrowers from borrowing while encouraging lenders to want to lend. So with this decreased borrowing comes decreased buying, which should start to bring down the value of homes. right? So I was looking at a couple of home builder ETFs, and one was down something like 66% year to date. That's in comparison to the overall NASDAQ, which is down 17%, and the S&P, which is down 8%, Bitcoin down 13%, et cetera, et cetera. So clearly, the market is expecting this spike in interest rates to have a massive effect on the housing market. The reason that I bring this up is the psychology of the housing market drives a lot in the United States. And the United States tends to lead global markets. And so if the American consumer is convinced that the housing market has plateaued and is going to fall, that puts certain types of risk on assets in a very precarious situation, okay? And we'll see over the next few weeks how that plays out. And as I said, I'm looking at the markets right now. The Dow Jones and the daily is down about 1.75%, which basically has it down significantly the last 2 days and kind of flat on the week because it did spike a little bit earlier this week. So back to these original comments about volatility. All right. So as I said, interest rates tend to have a reverse correlation with stock prices in over time. I didn't expect this to happen the way it's playing out. I showed you some charts probably about a month ago where I expected stocks to continue to move higher because of the fact that interest rates were still pretty low, but I did not expect them to spike this quickly. And that has definitely put a damper on growth expectations, much more so than we've seen in previous cycles where we've had expectations of rate hikes. Okay. So what does all of this mean for Bitcoin? Why is Bitcoin kind of in this sideways funk right now? Right. So there was a really good article on CoinDesk here. Let me bring this up while I'm talking. There was a good article on CoinDesk about why or showing that Bitcoin's 30-day volatility has basically reached a year and a half low, right? So we're literally at a point where basically it looks exactly like it did in late 2020 when we started the bull run. And the volatility, it basically measures this deviation of daily returns over a time frame. In the case of a monthly volatility, it measures the deviation of daily returns over 4 weeks, and that's declined to just about 2%, which is the lowest it's been since Q4 of 2020. Now, this peaked in June of last year and has basically been declining ever since. Okay. So anyway, so you can read the article on CoinDesk. It's pretty interesting. Now there's some other things that I want to talk about here, right? So as I mentioned, right, stock volatility is definitely at an all-time high here. Now let's take a step back and talk about individual growth stocks. Here, Will Clemente did a great analysis this morning, which I'm going to share with you. Actually, this week, which I'm going to share part of with you. So Shopify, Netflix, PayPal, Facebook, ARK, which is a growth tech tracking stock, all down 40% or more year to date. Bitcoin is only down 13% year to date, right? And we have some pretty good theories on why Bitcoin is holding up so well, and why it's tracking the NASDAQ more than it's tracking growth stocks. Traditionally, as I've said to you in the past, because of the network effects attached to Bitcoin, it should basically show growth similar to Amazon, Apple, Google, Facebook, et cetera, but it's not right now, which is very interesting, right? It's been kind of flat and sideways from a volatility perspective, all right? So on the one hand, now this is an interesting chart, right? So in the blue sorry, in the black, we have the Bitcoin price. And we can see that from a log perspective, Bitcoin has, well, from any perspective, Bitcoin has basically been going sideways for the better part of this past year since the 2020 run-up. So if we come over here to the left and we go to September 2020, we see that massive run-up, which started more or less in October 2020 and peaked in May of last year. And as I said, we've more or less been going sideways ever since, with volatility kind of on a decrease since last summer. At the same time, what the blue shows is the correlation to the NASDAQ. And this correlation has been on an upswing since, well, more or less it bottomed out in the winter and is now basically close to 1, which is truly astounding. But and regardless, there's no denying that right now Bitcoin is basically correlated to the NASDAQ. Okay, it doesn't seem to be correlated to the growth stocks that are showing the risk stocks that are showing the larger sell-off. Here, what you can see is a couple of things. One, you can see in green how far the NASDAQ has moved off of its all-time high, which really hasn't, been. It's enough to say we're in a bear market, right? But at the same time, it's not like a free fall. But at the same time, Bitcoin is barely budging in comparison. The other thing that's really interesting here, and we'll come back to this in a moment, that this kind of yellow tan chart shows the percent of the supply which has been more or less inactive for at least a year, and that percentage is at an all-time high as well, which is part of why I think we've reached this kind of equilibrium between whales coming in and long-term holders continuing to come in, and this broad-based market sell-off, which is kind of keeping Bitcoin relatively steady at this price that it's at right now. So this is another view of that same information I was just showing you, where gray is the price and blue is the Bitcoin supply that was last moved at least a year or more ago. And as you can see, almost 64% of the Bitcoin supply has not been moved in at least a year. All right. So what that tells us is, and this correlates to this idea of this illiquid supply shock ratio that I've talked to you about many, many times, and that is also spiking. And we've only seen these kind of spikes, extreme movements off of exchanges when Bitcoin was gearing up for another bull run. In other words, we've never seen the data look like this and then seen a precipitous fall in the Bitcoin price, right? And then lastly, of course, one of my favorite numbers here, or one of my favorite graphs, in red, you see the volume of Bitcoin moving off of exchanges, right? And so when it's green, it's positive. When it's red, it's negative. Negative meaning that the Bitcoin is moving out from the exchange, not onto the exchange. All right. And you can see that by and large, every kind of precipitous fall into the red has led to a price spike up until now. So the question is, the previous three kind of lows in terms of significant amounts of Bitcoin moving off of exchanges have led to price spikes. The question becomes, is this time going to be different? And look, it's possible that this time is different. And the key point being that we weren't basically pricing in a recession during these previous movements. We were basically in a macro bull market from an equities perspective. So this is a little bit of new and uncharted territory. But the bottom line is we've kind of reached this equilibrium between long-term hodlers coming in whales, institutions we're seeing now, high net worth investors that are basically supporting these price levels of somewhere between 38 and 45,000 Bitcoin, in that range. And I'll show you the price chart for Bitcoin in a second, and the broader sell-off in the markets. And that equilibrium is what I believe is holding the price fairly steady right now, versus the traditional markets. And so I'm going to bring up my trusty price chart here. And let me start with Bitcoin. Let me stop the share here and share my trusty chart. Okay, so we can see, and this is the daily chart for Bitcoin. The orange bands basically represent, let me try to zoom in here a little bit. The orange bands basically represent the price movement of Bitcoin this year, since basically early January, right? So over here on the left is right around January 10th. And over here on the right is April 22nd today. Now, what's really interesting is we've broken out of the bottom of this band. Now, we've done that a few times before this year. You can see here on January 24th, on February 24th, on April 18th, and then again today. The three previous times that we've basically broken below this band, we've spiked back up above the band to close above this yellow band here. Okay. I would posit that if that doesn't happen today, we could see significantly lower prices in Bitcoin before we get back up. And that's just a technical reading of price action combined with the fact that the volumes haven't fallen significantly. If we were seeing this fall in price on lower volumes on exchanges, I might say, it's probably a nothing burger. But if we don't spike back up, there is a good chance that we see much lower prices this is just pure technical analysis. This is not fundamentals. There is a good chance that we see lower Bitcoin prices before we spike again. Now, we were pretty close to a breakout here in late March, early April. And I talked about this on the show, where it looked like Bitcoin was gearing up to break out and retest these interim lows of mid-December, which would be a move back up above 50,000, and the markets just weren't having it. Again, I think it's that equilibrium in hindsight that we reached between the whales and holders coming in and the broader sell-off in equities, which is highly correlated to what's happening with Bitcoin right now. So this begs the question, what is it going to take to break this correlation? And I think the answer is one of two things, right? And Will wrote about this in his newsletter today as well. But basically, if we keep seeing these whales and long-term hodlers coming in and taking Bitcoin off of exchanges, eventually something has to give, meaning the equilibrium will break, right? So at that point, there simply won't be enough Bitcoin to go around, and the price would have to spike, okay? Regardless of what's happening with equities, that would have to break the correlation, because you don't get this equilibrium with equities where people are just long-term holding equities off of exchanges. It doesn't work that way. So it seems that this is one of the issues. And the other is some kind of macroeconomic event where we hear about major institutions coming in to hold Bitcoin and crypto. I know anecdotally through Abra that there are many institutions kind of circling the moat of the Bitcoin castle right now. And I have a feeling that these two events combined are going to break the correlation between Bitcoin and equities over the next year or so, if not sooner. Okay, so enough of that. Let's stop this, and we'll get into a little bit more on Ethereum and what's happening with some of the others in the crypto world later. But I just wanted to address this kind of sideways issue for now. So let me get back to the show notes here. So just make sure. All right, so let's see. We talked about the price range. We talked about volatility. We talked about the correlation to equities. I want to get into some updates about what's going on with Abra Earn. We've got some new coins that we're launching there, which is super exciting. And then, of course, we're going to hear from Natalie. And before we get into all of that, and at Abra, we really believe that getting into crypto should be super, super easy. So we've built a whole bunch of ways to add money to your Abra account so you can choose the method that works best for you. Take a look at this.
Funding your Abra account is easy. Just open the app, then tap Add Money. To buy with your Visa or MasterCard, tap the app. Click Bitcoin through Simplex. Open in your web browser. Enter the amount, then paste your Abra wallet address and tap Continue. To transfer money from your bank account, tap on ACH Transfer, add a new bank account, Continue. Then select your bank. Enter your username and password. Confirm your identity with a code. Select account, enter an amount, and confirm. For a wire transfer, tap Bank Wire Transfer. Then tap Wire Instructions. Log on to your bank's online banking page, then initiate a wire transfer. Follow the instructions on the Abra app to input your account, then send your wire. Transferring crypto is simple. Tap Deposit Cryptocurrency, then select the coin you're transferring. The Abra app gives you the receive address to send your funds to. Funding is easy with Abra.
All right, welcome back. I've got some product news for you here, and I've also got some market news. Russia has been all over the news this week. Curious to get Natalie's take on this when we get into her segment. I've been reading that Russia is looking at using crypto to let Russian companies make foreign payments. And the Ministry of Finance has been working on a bill there. Russian companies would be required to trade currencies through regulated crypto wallets and exchanges. It's unclear how this would affect all of the sanction regimes that are in place because of the war with Ukraine. We'll see how that plays out over the next few weeks. Super interesting goings on there. Talon Energy Corporation in Pennsylvania just announced a JV, a joint venture with a crypto mining company, and to do what they're calling zero carbon coins and an underutilized nuclear power plant. This is a big deal. I actually believe that you're going to see a migration of traditional Bitcoin mining into the energy sector. And by moving Bitcoin mining to the edge of the grid, you're going to see all kinds of optimizations going on, and effectively the energy companies and the energy sector more or less own Bitcoin mining, which I think makes a lot of sense at scale. So this mining facility, from what I understand, is going to be located adjacent to this power plant and have a direct behind-the-meter connection to their electric grid, which would give it one of the lowest electricity costs among any publicly traded Bitcoin mining company in the United States. So this is the start, in my opinion, of a massive shift in the mining space towards direct integration with the energy grid. And it is super, super bullish for the long-term viability and sustainability of Bitcoin. All right. The Bahamas announced that they're going to start letting residents pay taxes with crypto. And this is the move is part of the country's digital asset strategy. They're looking to transform the country into a leading hub for crypto across the Caribbean. The government is also enabling Bahamian residents to access digital currencies through the central bank issued Bahamas Sand Dollar, which I believe is going to be launched soon. So lots going on there. There's the SALT conference happening in the Bahamas. I think it's either next week or the week after. I know several folks from Abra will be there. Former President Clinton and other former presidents will actually be there, from what I understand. I won't make it this year, but I'm hearing it's going to be a huge event. And with FTX basically setting up shop in the Bahamas is becoming a hotbed for all things crypto. So speaking of all things crypto, we've got some pretty interesting news on the Abra Earn fronts. We've got 3 major coins just added to Abra Earn. We've got Luna, Dot, and Matic. So users have been asking us constantly when we're going to add these to Earn. Super excited that these are finally live. You can earn as much as 10%. So on Polkadot, you've got a 10% APY. Polygon, which is Matic, you've got 6%. Terra, which is Luna, you've got 3.75%. Super excited about that. We're going to be doing a lot more in the staking area in the coming weeks. The team has been working super hard on that. I know we've got our April launch of market orders, which is going to start rolling out in the next couple of days, which will lead to finally turning on Cprx Trading for all of you as you get access to market orders. We're going to have a lot more exciting product news coming, as I said, in the coming weeks. If you have any questions about any of this, put it in the chat and we'll try to get to all of it during the AMA. So up next, we've got Natalie here with news about record-breaking U.S. housing market that we talked about earlier, the latest round of sanctions, what's happening with the crypto mining news I just mentioned. And before we get to that, let's take a look at how easy it is to earn money on your crypto just by keeping it in Abra Earn. Hey, welcome back. All right, so our awesome Bitcoin analyst, Natalie Brunell, is here to give us a update on all things Bitcoin. What's going on, Natalie?
Hi, Bella. It's so great to see you. Yeah, so much news going on. You kind of touched on it earlier, but wow, Bitcoin's price, so volatile. It's chopping its way between 38,000 and 42,000. And I know you kind of did a bit of a technical analysis, so I won't get too much into it, but we've seen so many wicks up, so many wicks down. I think a lot of it's caused by these trades on the margins. Shorts are getting liquidated, and then all of a sudden the price spikes in the other direction. I'm actually in a large chat about Bitcoin and its price on Telegram, and so many people have had call orders in for bigger accumulation purchases if Bitcoin pushes down to the mid or say low 30s. But of course, that has not happened so far. It's just chopped along in this $4,000 to $6,000 price range that traders, I think, are taking advantage of. But hey, you know, Bitcoin gets the rep of volatility, but what about that candle in Netflix this week, right? So Bitcoin's obviously not the only asset that's seeing so much volatility in this macroeconomic environment. And I think the best advice is, of course, dollar cost average. And at the end of the year, you'll have taken advantage of some of these downswings. So, all right, what will bring some price discovery? Some people are hoping that it could be an Australian spot ETF that was just approved. It's going to start trading on April 27th. And now this joins the Canadian spot ETF. The Australian Financial Review predicts that $1 billion could pour into this new listing. So that could be bullish for Bitcoin. But at the same time, you know, over the last couple of weeks or month, we've seen hundreds of millions from, you know, Do Kwon to Michael Saylor pushing into Bitcoin, and the price has barely nudged. So I guess we'll have to wait and see. But of course, you know, it goes to show that where's the SEC on our spot ETF here in the US? We now have Canada, Australia, but still no spot ETF here in the US. In other headlines, Bitcoin miners are getting sanctioned in Russia. For the first time ever, the US Treasury took aim at mining operators that are in Russia because of the war on Ukraine. One of the biggest companies that was targeted is BitRiver, which operates these hydroelectric power mining farms and has more than 200 employees in Russia. The government believes that the businesses that are affiliated with BitRiver or subsidiaries of BitRiver are helping Russia soften the blow of economic penalties by funneling energy resources toward mining to circumvent the sanctions. But the company is firing back. They said they've never provided services to the Russian government, and they don't work with customers that are on US sanction lists. So BitRiver says this is interference that is unfairly restricting competition. And as you mentioned earlier, also Russia, the tax authority there, is proposing that they use crypto as a foreign trade payment tool. But I don't think that this really has to do with Bitcoin, even though we have heard from that Russian official a couple of weeks ago that potentially oil could be priced in Bitcoin. I personally think that this news is relating to CBDCs, as a lot of these countries move to central bank digital currencies. We already see the digital yuan and some countries putting that in their reserves. So we'll see what happens in Russia. But let's come back here to the US and let's talk about inflation, since we haven't spoken in a couple of weeks. The CPI print came out in that time. We're now at 8.5%. The Biden administration is blaming Putin, but we were already surging month over month over month. And I want to point out that the PPI, the producer price index, the cost of making goods, has risen over the last year 11%. So, I think you could argue against this corporate greed statement that politicians are making, that producers haven't even yet passed down all of the costs to consumers. Not surprisingly, the biggest increase has been, of course, in energy and fuel and food. So commodity prices have really been soaring. And at this point, I'm not sure how they're going to prevent CPI inflation numbers from hitting double digits by the summer. I think that they're going to try to find another scapegoat because they keep expanding the balance sheet, even though they're talking about quantitative tightening. So the market has done some QT, but really the central bank, if you look at the numbers, they have not. Meanwhile, Fed Chair Jerome Powell, he is reacting to the inflation numbers, saying it has to be tamed and rates could go up 50 basis points. That battered the traditional markets when he came out and said that. But think about it. That's still just a baby hike. We saw 25 basis points. It shows just how weak of a position I think economically we're in. 50 basis points is already spooking all of the markets. And really that'll do nothing to tame inflation. So I don't know if you guys saw, but this article came out saying that house prices have now hit a new record. And this is not included in the CPI. Now the median home price is $375,000 in the US, and mortgage rates are rising rapidly. That has slowed home sales, but it has been like the hottest real estate market in so many years. I know many people that went into real estate actually recently, and it's a wonder to me that so many of them are basically celebrating these increases as if it's productive to the economy. Which brings me to think about this great interview I saw this week with Michael Saylor and Lex Friedman, where Michael Saylor raised the point of how much the cost of living, the cost of homes has increased in the US about 19% over the last year, according to the Schiller Index. And he talks about how, economists are praising this as a really good thing, but it's not producing anything of value for our economy. And it makes it so much harder for families or for new graduates to afford a house. And it's putting a downward pressure on the middle class. So really, we're seeing so much strain on the economy when it comes to inflation. And the Fed, as we've talked about so many times, really backed into a corner. And I think that eventually we will see Bitcoin decouple from equities, because I think that pretty soon investors from institutions to retail will really see this as the inflation hedge that a lot of Bitcoiners promote the asset as. And the last thing I'll say about homes and prices, I loved a quote by Jeff Ross at the Bitcoin conference. You don't refresh your home price every couple of seconds, right? Or you don't try to sell it after a year or two. So don't do that with Bitcoin. It's a long-term hold strategy. And I guess the last thing I want to mention is the Bitcoin conference. What an incredible event. Abra had an incredible showing there as well. And $30 million was spent on that event. I couldn't believe it when David Bailey made that post. It was the biggest Bitcoin conference I've ever seen, I've ever attended. Last year was my first, a very full circle moment for me, obviously, because no one really knew who I was and my podcast was very new. But just the scale of it was really impressive. And I think it showed how seriously this industry is being taken by institutions, by massive brands. We had speakers from, Serena Williams and Aaron Rodgers to Michael Saylor Taylor and Kathy Wood and Kevin O'Leary. And it just amazes me how much the event is growing every single year. And so I can only imagine what it's going to be next year. It's too bad the price, wasn't reflective of just how big the conference was, but it was great to see you there, Bill. And for now, I'll send it back to you.
Cool. Thanks, Natalie. So a couple of questions. So did David mention what their revenue was from the event? Because we've been trying to guess at Abra how much they generated, and it's certainly in the 9 figures.
Really?
Oh,
Yeah,
God,
no, he didn't put that information out, but I'm definitely really curious about it because I can't believe that over $30 million was spent. At the same time, Miami, it's very, very expensive there. The hotels were really expensive, the Ubers and Lyfts. So if you're an attendee, you're dropping a lot of money on that conference.
It was incredibly expensive for Abra to be there. I mean, we had our entire sales team was there, a bunch of marketing folks. Some folks live in Miami, but most of us don't. And, the final cost for us to be there was huge. And I'm thinking about this across, was it 30,000 attendees, at least probably, I would guess 2,000 plus generated by their organization per attendee times 25 to 30,000. I'm guessing they generated over 100 million in revenue from the event all in.
That's incredible.
At what would you say, 30 million he said he spent?
Over 30 million, yeah.
30 million. So that's a pretty good return for a year's work. If we're doing our math right, which is incredible.
Yeah.
So what is the key kind of takeaway from the Telegram group that you mentioned on what's going to happen over the next month or so? Is there kind of a prevailing wisdom here, or is it more of a long-term outlook?
I just think it's so interesting that so many people within the Bitcoin space, even these bigger voices, some of which are in the chat, they're kind of holding some powder because they think the price will go lower, and they have some buy orders in that are, in the low 30s. And what we haven't seen that, and Bitcoin's remained sort of strong in that 37 range. It hasn't really dipped below that. But at the same time, it's interesting to see that even the most bullish people think that with the volatility in the markets overall and this macro picture with inflation and rate hikes, that Bitcoin could take a tumble, and we see bonds selling off. And I just think we're in this really frothy, sideways, choppy motion that I know Lynn Alden, when I spoke to her earlier in the year, she predicted this. She's like, it wouldn't surprise me if we stayed in that kind of high 30s, low 40s range for even a year or more. A lot of people on the macroeconomic scale, they're expecting stagflation. I just saw a really interesting interview with Ray Dalio where he was talking about stagflation and calling into question the global reserve currency being the US dollar in the future. And so it's just so interesting that a lot of these things are intersecting, and Bitcoin is now pretty much an angle to there's a Bitcoin angle to every story.
Right, for sure. I mean, we've been talking about stagflation here on Money Talks for almost 18 months now, that it was going to have to happen. You couldn't print that much money and have some outcome resembling a massive yield spike. But anyway, Natalie, awesome update. Thank you so much. I'm sure we'll see you on the conference circuit, if not before next week on Money Talks. Have a fantastic weekend. Thanks for the update.
Sounds great. You too, everybody.
All right. Thanks, Natalie. Let's see. So we've got a bunch of, I want to get to the AMA. I've got some questions on the market updates, which I'll get to as well. And also we'll get back to, I wanted to talk about Ethereum a little bit. So I know we say this every single week, but we really take this seriously. We do want to be your one-stop shop for everything crypto at Abra. I don't know if you know this, but I posted a tweet on this. There's I think it's payments.com, PYMNTS.com. I may have the spelling wrong. They track the top crypto apps and exchanges and wallets, and Abra has been screaming up the charts. We were basically not even on their charts like a year ago. And I think we moved up to number 5 last month, and we're up to number 4 this month, and we keep moving up the charts. I think we're the only app that's been consistently moving up the charts, and that's because of all of you. And so, we've made it as simple as possible to make trades safe and securely. And take a look at how it works.
Trading on Abra is easy. Just click the exchange button. Tap the source you'd like to trade. Tap on what you'd like to trade it for. type in the amount. Then click Trade. Tap, type, trade. Totally easy on Abra.
All right, super cool. Love Abra Trade. So we've got some big updates coming up on the product side for the next several months. As I mentioned in Abra Earn, we've added Dot, Luna, Matic. If you're not using the app, please download Abra, move the crypto over, and you can start earning. I'm just looking at my Abra app right now, checking out all the new coins that are in there. Very cool. Okay, so yep, there they are. I see that. So I see 10% on Dot. I see, I've got my Abra app here. I've got, let's see, 6% on Polygon. I've got still holding steady at 7.5% on stable coins. Plus, I'm in the to the moon category, so I get an extra 5%. So I'm at 12.5% total for my stable coins. All right, let's get to some questions, and then if we have time, I want to go back to a couple of charts. But I see we have a ton of questions teed up here. The number one question is about Cprx trading. So let's get into that. As I mentioned many times in the past, and I'm sure those of you following us have seen on Twitter, we will be enabling Cprx trading to coincide with the launch of market orders. Market orders are going to start launching on a rolling basis for different users soon. And I don't have the exact date and time, but it's going to be in the next few days, I believe. And at that point, once those are live, we will be flipping the switch on Cprx trading. Now, a couple of things, right? So Cprx is a new currency. It's a new crypto asset. It didn't exist, a year ago. All right. So the vast majority of Cprx is not in circulation. It's being held by the Crypto Banking Alliance. The vast majority of Cprx held by Abra users is being held in Abra Earn now. So it's also not liquid, right? So if you're trying to trade Cprx, please keep this in mind. We've had people come back to us and say, hey, I'm trying to trade Cprx and it looks like the spot price is, 3-4 cents. But if I try to sell it, the price says, I don't know, 2.5 cents. I just made that up. But my point is if you're selling Cprx on another exchange, it is not a liquid asset yet because almost no one is selling it. And as a result, be very careful if you decide to sell, because the price you see may not be the same price that you see on the screen show in your kind of portfolio tracker. And that's because there's not a lot of people on exchanges trying to sell Cprx right now. Almost everyone is holding. And so just keep this in mind if you are planning to sell when the market orders gets turned back on. I think something like 65% or 70% of all of Cprx in Abra is now in Abra Earn, earning incremental yield. Okay, so keep that in mind. I know I keep all of my Cprx in Abra Earn. Okay, so I've got a lot of questions here. I'm not planning to take any more questions on Cprx trading. We have a lot more announcements coming up on Cprx in the coming weeks. It will be turned on when it's turned on. And that's all I'm going to say about that today. All right, so many questions. Where do I start? Again, no more questions about Cprx today. So let's see what else. So many. Mental, I already answered the question on market orders. And let's see what's going on here. Let's see. Here's an interesting question. What is Abra's plans for NFT support in the Abra app? Are you looking to add an NFT wallet to Abra? That is an excellent question. It's something that we've looked very closely at. And I'm not going to give too much away right now, except to say I personally am really excited about the NFT market. I am really excited about the potential for NFTs within the Abra app and Abra's unique ability to make things really easy. If you've ever bought an NFT or ever tried to, the biggest problem with it is if you go to like an OpenSea or Super Rare, is you have to basically use this MetaMask app to do it, or one of these third-party crypto wallets that basically puts the key on your phone. And it is incredibly complicated to do it. And I think Abra is in a unique position to make that super, super easy. Okay, so that's all I'm going to say about that right now. Jacob asks if Abra Borrow is going to be available in California sometime soon. Jacob, the answer is yes. Abra has a lending license pending in the state of California. I believe that license should be issued, I hope, soon. And as soon as it is, we will turn on Abra Borrow in California. We've actually turned on Abra Borrow the last few weeks in a couple of other states. I don't have the exact names of which states, but I think we're up to 45 states now where Abra Borrow is available in the US, and of course, dozens of countries outside the US. Okay. Let's see, what else do we have here? Is Abra hiring? Yes, Abra is hiring. And if you go to either LinkedIn or the jobs page on Abra, you will find a listing and a process for applying. Abra has hired over 100 people in the last several months, and that doesn't include the growth in our support team. We've been growing our engineering team, our finance team, our legal and compliance team, operations, our new funds, et cetera, et cetera. Our sales team globally is booming. So this is a great time for us because of all of your support, and our hiring has been trying to catch up to all of the tremendous growth that we've seen in our services. Okay, so why, Tracy, good question. Why does it take so long to move funds from earn to trade? So understand what's happening, okay? When you put funds in Abra Earn, right, you're basically using myriad models within Abra to earn that yield. The money has been put to work. The crypto has been put to work to earn yield, either in collateralized loans, in DeFi positions, et cetera, et cetera. We maintain a certain amount of reserves, and every day there's deposits and withdrawals coming out, right? So we have to balance a withdrawal request coming in with deposits coming in, as well as money that's been put to work. And for large withdrawals, we may have to take money out of a DeFi position or out of a loan. And so that can take anywhere from 1 to 7 days in most cases. If it's a small amount of money, meaning less than like $50,000 or less than $100,000, that should take less than a day to process. But it's not just sitting there in an account. We're doing something with that crypto for you with our partner Prime Trust to earn that yield. And hence, it's not instant to be able to take that money out of the Abra Earn yield account and back into the trade account. It takes a minimum of a few hours, and in some cases up to a day. Rare cases, if you're holding a lot of crypto in Abra, it can take up to a week, but I don't think I've ever seen that. All right, so hope that makes sense. Tracy, keep the questions coming. And I'm going to take a couple more questions here, at least. Let's see. I don't understand Marty's question here about all these coins, so I'm going to skip that. Is Abra planning to onboard Solana sometime soon / this year? Jacob, excellent question. This is something that I personally want. And I've been pushing our trading and custody partners to add Solana as soon as possible. And I have no update there other than it's a top priority for me. I wish that I had Solana on Abra, and I hope we can bring it to you as soon as possible. And I'm getting a bunch of questions here on the availability for one of our competitors, Celsius, who's recently changed their offering in the US to only be available to accredited investors. And is Abra planning to make a similar change? So I can't speak to how Celsius and BlockFi and others work, except I'll tell you that I believe Abra is unique in the crypto space in that we pay interest to you through Prime Trust. Prime Trust is a trust bank registered in the state of Nevada, and they are legally allowed to pay that interest. We're in constant communication with Prime Trust about what's going on in the space. If they decide to change how the model works, and decide to only offer the product to accredited investors, we'll obviously let you know. But as far as I know right now, there's no change to that offering. But we are constantly looking at it, and we have spent a lot of time, a lot of money, a lot of resources analyzing how this works and making sure that Prime Trust and our lawyers and everybody else involved is comfortable with how Abra Earn works vis-a-vis both banking and securities regulation. Okay, so hopefully that makes sense. So let's see. Somebody asks if I've talked to Charlie Lee about new NFTs on Litecoin blockchain. This is coming from Donnie. Dami, I think we're going to have Charlie back on Money Talks in the next few weeks, so we can ask him directly when we have him on the show. I think it's a very interesting idea. With Mimblewimble coming out, I think Litecoin could be a very interesting platform to be testing a lot of things, such as NFTs. Let's see what he has to say when we bring him on. I have not spoken to him yet about it. But let's see what he has to say. So Jeff Jet asks, will the Abra app have a liquidity pool? So Jeff Jet, I think what you're asking is will Abra offer direct access to other DeFi liquidity pools or form its own liquidity pool? And the answer is, I don't think Abra will form its own liquidity pool, but we are planning to eventually offer direct access to other DeFi liquidity pools, bypassing Abra Earn normal staking model. So this is something we're working on. I don't have an exact time for this, but it's something that we definitely want to do. So that's that. Tonya asks when we're going to have NFTs. I've already talked about that. It's something that we're really, really excited about. So Bob asks for DOT, are we staking DOT or are we paying the interest from loaning the money? Bob, we are staking DOT. So you are basically staking with all three. Hope that makes sense. So yes, we will be making that more clear in the app and terms of service in the coming days as well. So let's see, what else do we have here? Really good questions today. Thank you, everyone. This is great. No plans to offer stacks from what I understand. Somebody was asking about that. I've already answered the questions to retail on Cprx, so I'm not going to talk about that again. John asks, does Abra have plans to offer structured credit products like collateralized crypto loan obligations to retail customers? John, we already do this. It's called Abra Borrow. And so if you go to Abra Borrow, you can actually borrow against your crypto, which is effectively what you're asking. And we offer it for amounts, I believe, up to $1 million. A 15% loan to value loan is completely free, 0 interest. And so check out Abra Borrow in the app. Abra Borrow is available, I believe, in 45 US states and probably up to 100 countries now. And we also have an institutional lending service, which is a huge part of our business in the background. And so if you're an institution, hedge funds, or have another reason for borrowing crypto or stable coins, you should contact Abra if you're not a retail consumer, and we can put you in touch with our institutional lending operation as well. Okay, so I'll take a couple more questions, a lot more coming in, and then we'll call it a day. I don't think we're going to get back to the charts, but nothing's really changed since we started. So let's see. So Catherine was asking about what makes a crypto hotspot. This is an interesting question. I got this question yesterday at the Abundance 360 conference from two perspectives, meaning what are the other hotspots right now and what should other countries be doing? So I talked about, let's see, Switzerland is very interesting. They've got some really kind of compliance-friendly regimes in certain parts of Switzerland, particularly Zug is super interesting. We mentioned the Caribbean already. Germany has been really interesting because, to my understanding, there's no capital gains taxes on crypto in Germany. Puerto Rico is also super interesting for the same reason. There's no capital gains, state or federal, if you live in Puerto Rico. And so it's become a hotbed. A lot of people in my world have moved to Puerto Rico for this reason. They've become kind of crypto wealthy. And if they're planning on selling any crypto, they would prefer to do it while taking up residence in Puerto Rico. So there's a lot of reasons. I think if you want to look at what not to do, look at India. I mean, as the largest democracy in the world, or one of the largest democracies in the world with a massive technology infrastructure, they have trained more computer scientists than anyone. They should be leading in crypto. And all of this regulatory nonsense is just killing them. Anyway, so we should do a segment just on kind of global hotbeds and what's worked in some countries, what's not worked, what's happening in El Salvador, why it's really not working the way I think people thought it would, which is what I warned you all about basically a year ago. Anyway, great question. I think we should spend some more time on that in the future. A couple of questions on Abra merchandise. So I think let me think about this for a second, but two things. One, I believe there's a store on abra.com. If you scroll to the bottom of the screen, there's a link where you can actually pick up some merchandise, and I'll check with the team to make sure that's up to date, because you see my new hoodie with our new logo, which I love. I wear it all the time. I have a couple of them now. But we'll also try to do some swag giveaways in the next few weeks. And I'll talk to the team about that. I don't like having the live stream cluttered with people's IDs, so we've got to figure out a way to do that without cluttering the screen. Okay, so I'm losing my voice, getting all stuffed up here, so I'm going to call it a day right now. We're going on an hour anyway, and I spoke for 3 hours yesterday at Abundance 360. The questions wouldn't stop. It was incredible. Okay, so thank you all so much for the support. We will see you next week on Money Talks. Thank you very much.